Good morning. It's Tuesday, the 22nd of November, and welcome to Talking Bulls live stream on TradingView. Third time lucky. Sorry about that. There's seems to be these technical issues that we keep getting flooded with. It's Steve O'Hare today. Joe's down in London at one of the Finance Magnet show, and it's me. You've got me on my own, but I'm going to get you through the morning. Obviously, dive in and join in the conversation, ask me about markets, question me, challenge me, and let's see if we can get through and give you some tools for the trading day. So we're going to dive into the news headlines, really, talking about the ECB to start with. In comments on Monday, ECB chief economist Lane stated there would be a further interest rate hike at the December meeting, but that the platform for a 75 basis point rate hike is no longer there. So a little bit dovish from the ECB. He added that the more you've already done on a cumulative basis changes the pros and cons of any given increment. The overall rhetoric was notably dovish. Cleveland Fed President Mester stated that the bank is not anywhere near stopping rate hikes, and policy is barely in restrictive territory, although it does make sense to slow the pace of hikes a bit. She added that there has been some positive news on inflation, but a sustained run of positive news is needed. San Francisco head Daly stated that she was not ready to say what the central bank should do at the December meeting. There were further concerns surrounding the coronavirus situation in China after a Beijing official stated that the city faces the most complex and severe COVID control situation. Risk conditions were generally weaker during Monday, especially given Chinese coronavirus concerns, but equity moves were relatively muted and limited as markets waited for further US inflation data. Overall, risk conditions remained important for the dollar trends, with the US currency gaining net support on Monday. The US currency lost some ground on Tuesday with a lack of conviction over near-term trends and an ongoing debate whether the US currency has peaked. There was high volatility in oil prices during Monday, with WTI sliding to a 10-month low on reports that Saudi Arabia would cut production. And although that really, you'd think if they're cutting production, that would actually make the price go higher. So I'll check that headline out. WTI posted heavy losses to near $75 a barrel. We're going to dive into the technicals around that before a strong recovery as Saudi Arabia denied the reports. There you go. That's why the price came off. They denied the reports. So that's all good in the hood. Let's dive into some charts. And I'm going to dive into Bitcoin first. Obviously, front and center, Bitcoin hitting substantial lows again, remains below the previous support, now a resistance level. We've got one highlighted here, the 17,600 level, which was the swing low from way back then. Thank you very much for the coins. From the 18th of June. That was the peak, the bottom, 17,592. We bounced back up to around about 25,000, and we've been bearish since, forming this bearish pennant flag, but it's breaking lower at the moment, and we got down to a low of 15,479 on this chart yesterday, and still on the back foot. You can still see the pressure on Bitcoin. So really sort of like trying to see if we can go further from here. Mock, I'll take a look at what you're looking for. You're looking for New Zealand US dollar at the moment. I will try and dive into that. Remind me if I don't, but New Zealand US dollar, I will dive into that in a second on the FX. Other coins we're looking at, or cryptos we're looking at, is XRP. Obviously, this is in the news all the time. This looks to have failed in its attempt to reverse the downward move and move higher. Support coming in now around about the 28.70 level, and resistance firmly at the 41 cent level. So broken down from this triangle formation, and also forming another triangle formation here. So this doesn't look great for. We could get another continuation lower on Ripple. The measured move target for a formation like this, if we are talking about a bearish flag, then we're looking at something like that. The measured move target on that would be around about 23 cents. So looking for really that if we do break that lower there, take out this horizontal support. It's still got a little bit of a mire of support to get through, but that's the downside options. On the upside, we expect resistance to come in around about, as I say, the 41 cent level, and above that all the way up to 48. A plethora of resistance. So yeah, watch out for that. Now, let's dive into commodities and take a look at where gold is. Looking at the daily chart in gold, we've got a little bit of a positive vibe this morning. We've had 4 negative days of price action, and we've stalled at this previous resistance, which now turns into support level. And this is all the way down to 1730, and that is really, what did we get down to yesterday? 1733. So 1730 to 35 was the support. It's stalled there. Buyers have come in, and we've seen a nice reaction higher. So obviously dollar getting bashed about by, sorry, gold getting moved about by the dollar movement. That's the main driver at the moment. Also, you've got the safe haven aspect of this, especially when indices are under pressure. But at the moment, it survived the first assault on the downside, and buyers have won the day. Looking at copper, again, we've got negative price action, 6 negative days of price action. We've broken through that support and level, which comes in at 356. Had a little peek through it, but again, buyers came in and reacted higher. Again, a dollar-driven move. So they're the levels to watch in copper. Anything else on the charts showing up? Maybe on the 4-hour chart, we've got a nice bullish hammer here, and this you could easily say this was a nice bottoming formation. Again, we've had a reaction lower, but prices have moved back to where they've opened, showing some form of support coming in at this level. Now let's take a look at crude oil and exactly what happened yesterday. That's on the 4-hour chart. So we've got this really tasty looking candle, which hit the support, the horizontal support, from all the way back on the 26th of September. That's the low. We broke through it down through $76, got down to 75.24 on this chart, and bounced aggressively higher. Now that for me looks like a long-legged doji, a nice sort of like bullish hammer type candle at the bottom of the range. The sell-off, let's take this trend line out, which is broken, and this could set up a nice little reversal pattern. Now if we do play out, we've got the support here, and obviously you know what's coming, this neckline here at 92.68. So a potential for a double bottom. And if we really sort of like have a look at what has happened going back historically all the way to even last year, we can see how important this formation is to hold. If we do break through this formation, we're heading down towards $61. Holding here could be this impulsive move higher, the correction lower before we go again. So very, very key day yesterday. Really did have a washout, and buyers, for me, buyers have survived that first little brush with this support level. So looking pretty decent. Similar sort of price action in Brent crude, obviously. That held the support level even better. The low from the 26th of September was 82.35, and this lovely bullish hammer here got down to 82.27. So just took out that previous swing low, but not for very long. So again, potential for a morning star formation, and yeah, overall feel quite positive for oil after that sell out, the flush out yesterday. So let's dive over and see what is going on in the Forex. In the well, we've got this nice channel in the dollar index, this nice channel. Could you say this is a channel? Maybe not. Let's take that off. We've got the resistance coming in here. For me, that is key resistance. 1, 2, 3, 4, 5 points. It's hit. So let's make it a actual resistance line. On the support side of things, we had the support around about the 50% Fibonacci retracement of this previous swing higher from the 10th of August to 28th of September, the sell-off lower, and Fibonacci retracements held pretty well around about the 50% for a little while, and then we've taken out even the 78.6%. A bullish hammer candle formed on the 15th of November, and then since over the last 3 days, we've seen decent price action, which has also added to that sell-off in the dollar-based commodity assets, oil and gold and copper. Today's price action, a little bit muted to start with. We've got yesterday's high coming in at 107.99, we'll call it 108, and we're not far away from there really. Could quite easily sort of like retest that. On the shorter term price action, let's take a look at the hourly chart. Yeah, looks a little bit toppy. Could easily be setting up a head and shoulders formation. Taking that head, downward sloping as well. So this could be more aggressive. So the neckline, for me, support at 107.53 is key. If we manage to get a break of the 107.50 level and take that out and close below there on an hourly basis, then that really does open up the downside. Now, if we want to have a measured move target for this formation, that's where you're looking at around about the 107 level. And again, you can see the horizontal support areas that will be come into play if we do manage to break down there. Take a look at how that impacts euro US dollar. And we've got a nice potential for the exact same, the reversal of that formation, the inverse head and shoulders, playing out quite nicely, upward sloping as well, aggressive one. So key levels to watch here. Yesterday's high, the 102.68, and we're breaking through it now, as you can see. So if we manage to get an hourly close on this euro dollar above this neckline, then that sets up a measured move target for this formation, would be around about 103.14. So that's a nice little start to the day for the euro dollar. Cable will have something similar, not quite clear, not quite as clear as the previous formations, but again, we look for this head and shoulders neckline, upward sloping. Needs to do a lot more work. I wouldn't really sort of rely on this formation. It's much nicer when we get areas of confluence with this. But for me, we're above the resistance. We've now got support at 118.40. Key to take out this swing high here at 118.63, a break of there, and it would open up maybe a potential move to the area of resistance, which would be highlighted by the previous. Let's turn that red. That's resistance. So that's what we're looking at for cable. Dollar yen, again, looks like a nice little top formation. And let's bring in the lovely, the head and shoulders. It's head and shoulders all over the place. That's breaking down through the neckline. For me, we take out this where the neckline is between the head and the right shoulder. That'd be quite key. 141.62. We're trading there now. So again, the dollar move happening early in the European session. Can it be sustained? Who knows? Right, let's take a look at New Zealand dollar, US dollar. And we can see, again, similar types of formation. It's like head and shoulders, inverse head and shoulders, whatever you want. And for me, this is like, could be in for quite a volatile day, which could line up quite nicely with the turnaround Tuesday comment that I made on the heading of this show. So yeah, looking forward to seeing if this can play out. So measured move target for this formation, let's get it up to there, is 61.62, and that would take us right to the horizontal resistance, which is just above there, up to 61.68. So a really nice start for New Zealand dollar, US dollar. Long around there isn't a bad place to be. Long on the break, which is nice, and stop could be anywhere below the right shoulder. So keep that risk reward in mind when you're trading. So hope that helps. And yeah, let's dive in. Let's carry on. Any other markets you want me to take a quick look at, I can. Let's take a look at the indices now. We'll start with the Dow, the US 30, and as we continue this sideways price action, it's just indecision. The impulsive move higher looks to have stalled around about the previous swing high from 16th of August. And we're just getting these dodgy candles, Taff. And yesterday, exactly the same. We had the spikes in both directions, opened to close at the same price. So really does not feel like it's comfortable at these levels. We are going to get a break one way or the other, but this for me looks quite toppy. You know what I'm like. I'm a bit of a equity bear at the moment, well, all the time, but that's another story. The inverse head and shoulders in NASDAQ hasn't quite played out yet. It's key for us to hold on this 11,500 level. That's under pressure at the moment, so it doesn't look too good there. A break below there opens up a bit of a vacuum move, if I think, because if we look at it, it's Thursday's price action that has really got us up to these levels. We've hit a shooting star candle at the 50% Fibonacci retracement level and broken lower. So yeah, under pressure still for me, the indices. Same for S&P really. Shooting star candle at we had the inverse head and shoulders, and we nailed that really. That got up to within a tick and a half of the measured move target. So that was a decent technical move. And the stall there and the hanging man candle here, which really sort of highlights the potential for a bit of a top here. 3,900 would be a break below there, would open up the downside, and yeah, back under pressure again. Really needs to take out that 4,044 level to crack on. Germany 40, this hanging man candle yesterday, I tried to sell this myself yesterday. I did it on the Talking Bull show. I think I got stocked out. Let's check in a minute. But again, still feel quite bearish towards this. This is topping. It looks like it's topping out, but it's always difficult when the indices are in this sort of mood. 14,120 to 30 would be the support level. Break below there, and again, vacuum move could take us down quite quickly to around about the 13,700 level. If we've managed to push on, we've got a huge amount of resistance all the way up between 14,575 and 14,950. FTSE doesn't seem to be too concerned about anything really. That's just continues the drive higher. This, out of all the indices, looks slightly more positive, and yesterday managed to take out and move to levels we haven't seen since the 13th of September. Resistance a little bit higher than we are now, maybe 100 points higher, between 75.12 and the 75.78 level. Again, really needs to take out. There's decent support below around about 7,300 and also down to 72.45. Really needs to clear them levels below to sort of get onto the bare foot again. Overall, indices still in bear territory. However, they are battling. They're battling away, and we'll have to just wait and see how they play out. We haven't got much in the way of data coming up, but we'll dive into that. But let's take a look at our gun to head. Now, just as a reminder, our gun to head challenge is when participants on the live stream each pick a trade idea in a market under pressure, and we have to enter at market. We have a 2-to-1 risk reward strategy that we must implement, at least a 2-to-1, if not more. The trade ideas expire either when they've hit the target, hit the stop, or at 9 p.m. UK time, and we monitor the performance. It's done pretty well over the last 733 shows. I think there's a few more shows than that, but it's around about that number. And yeah, overall, we seem to sort of like get a bit of a handle on it, and maybe proves technicals should be taken seriously. Anyway, let's take a look at how we got on yesterday. I'll stop that. Let me present my other screen. Here we go. And let's dive into the profile and take a look at ideas from yesterday. So Joe's gone to head was top pattern on HK50, Hang Seng, and he played out and he finished just on side, a little bit on side. Doesn't look like much, Joe, but you finished on side, so well done there. And the price action overnight has started to push lower. So overall, not a bad little idea, and looks like this head and shoulders formation in the Hang Seng is playing out. And I was quite aggressive with the Germany 40 index, which meant my stop was pretty tight. We talked about it on the show yesterday. Really, ideally, you should have had your stop above 14,470. And silly old Steve got stopped out. And the high was 14,456. We did talk about this yesterday. It was an aggressive trade idea, and started off really nicely, was about 1 hour on side at one point, but the afternoon move took that stop out. That's where I got stopped out. So I go again. Again, the price action has come back down to the levels we were looking at, around about the same level as it was yesterday. So for me, there's good potential here for a double top formation. Now, the double top formation would be this candle that's high here, this high here. The neckline would be a break of 14,318. That's when the double top formation would be in play. Not before then, only when it breaks. Until then, it's a potential double top formation. So what to do today? Let's stop that screen and dive back into the charts itself. And there's a few that's really interest me. I'd love to go again on the Germany 40, but I think I might have to take a look at foreign exchange. Do I fancy the New Zealand US dollar? I do actually. Let's go for that, shall we? I'm going to go for it. I'm going to be brave, Billy boy, and I'm going to buy New Zealand US dollar. This inverse head and shoulders has been confirmed. I can tighten the stop up a little bit. And I'll target a move back up towards the highs. So that's what I'm going to go for. It's only going to be a 2-to-1 risk reward. So I've got, well, I could tighten it up if I wanted. You know, I've got no, I could bring the stop up a little bit higher. Shall I do that? Why not? That looks a little bit too punchy, Steve. Yeah, I don't mind that. So that gives me 3-to-1 risk reward on that trade idea. Buying here at 61.35, target in a move to 61.95. The stop is at 61.15. So I've got a 20 tick stop. Is that enough? Really? Should shade it a little bit, Steve. Just put a more sensible stop in there. There we go. 2.4 to 1. I'm below. My stop is below the these three candles, the low of these three candles. So that's a bit better. So there's my trade idea. The stop is at 61.10, targeting 61.95, getting in at 61.35. That's my trade idea this morning. New Zealand US dollar. I'll publish that as soon as we finish the show. So what have we got to look forward to today? We've got 130 Canadian retail sales. Maybe quite interesting. Bring some volatility into it. Everyone's looking at inflation numbers, etc. Key events over the week, November the 23rd, the global PMI flash data. So again, more interesting numbers to take a look at today. So thanks for joining me today. Hope you've enjoyed it. Hope it's been informative, and look forward to seeing you again tomorrow.